Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends and market movers. It's Tuesday, May 27th. I'm Nelson John, and here's what's brewing in the markets today. India's aviation sector is in for a jolt as IndiGo's co-founder Rakesh Gangwal prepares for a stake sale. Meanwhile, Leela Hotels is testing the waters with a 3,500 crore rupee IPO. Up in the sky, literally, Elon Musk's Starlink is closing in on India launch. Back on the ground, the NSE and BSE are locked in a high-stakes battle over weekly expiry days after Sebi's new rules reshuffled the derivatives deck. Who will blink first? And finally, India's mango diplomacy is in full swing, pushing the US to ease its strict import rules after a costly fruit fiasco. Could a trade deal finally open doors for Indian farmers? All that and more right here on Top of the Morning. A big move is coming in India's aviation space. Rakesh Gangwal, co-founder of IndiGo, and his family trust are gearing up to sell shares worth up to 6,831 crore rupees in the airline. The block deal, expected today, could offload up to a 3.4% stake at a floor price of rupees 5,175 per share. According to BSE data, Gangwal personally holds 5.3%, while the Chinkarpur family trust owns 8.23%, taking their total stake to nearly 13.5%. This sale, which will be executed in multiple tranches, will be facilitated by Goldman Sachs, Morgan Stanley and JP Morgan. The news broke after market hours on Monday, sending ripples through investor circles. IndiGo shares already closed 1.78% lower at rupees 5,418.3. Despite the dip, the stock's been a high flyer, up over 461% in 5 years and more than 27% in the past year alone. With a 2.09 lakh crore rupee market cap and shares nearing their 52-week high, this stake sale could signal a strategic shift or simply a profit-booking move by the Gangwal family. Investors will be watching closely as the skies churn for IndiGo. India's stock market turf war just got a fresh twist. Sebi has dropped a game-changing circular that allows exchanges to pick one day, either Tuesday or Thursday, for all equity derivatives expiries. And now, both NSE and BSE are racing to lock in their prime slot. NSE, which currently runs Nifty weekly expires on Thursdays, has formally requested a shift to Tuesdays, precisely the day BSE had moved its Sensex expiries to earlier this year to grab more traction. If NSE's request is approved, BSE may be forced to move back to Thursdays or risk losing hard-earned volume. It's a strategic showdown, said a person familiar with the matter. A shift to Tuesday could boost NSE's market share by 5%, while BSE may see its volumes squeezed into just 2 days instead of 3. Sebi's rule aims to rein in expiry day retail frenzy, but it's now set the stage for an expiry day battle, reports Mint's Ram Sagal and Neha Joshi. Exchanges must finalize their choices by June 15th. Until then, it's a waiting game, one that could reshape India's options trading landscape. Elon Musk's Starlink is getting ready for liftoff in India, and it could shake up the broadband market. With a green signal from the Department of Telecommunications via a letter of intent, the satellite internet giant is closing to launch its operations here in India. The big buzz? Plans could start at just rupees 850 per month, offering unlimited data, making it one of the world's most affordable satellite broadband deals. Starlink is reportedly aiming for a whopping 10 million subscribers in India, banking on low prices to recover heavy investments and spectrum fees. But there's a catch. India's telecom regulator is reportedly pushing for a 500 rupee urban user surcharge, along with other levies, 4% of AGR, rupees 3,500 per spectrum block, and an 8% license fee. These are yet to be finalized. Still, Starlink seems ready to absorb initial costs to tap into India's underserved rural markets. Compared to global pricing, $80 per month in the US, this could be a game changer for digital inclusion in India. If cleared, Starlink may finally bridge the connectivity gap in India's hinterlands, with Musk's satellites lighting up the sky. India's luxury hospitality sector is about to witness its biggest market debut yet. Leela Palaces, Hotels and Resorts has launched a 3,500 crore rupees IPO, India's largest ever in the hospitality space. The move is set to test investor appetite in a lukewarm primary market where even giants like NSE are still waiting to be listed. Backed by Brookfield Asset Management, the offer includes a 2,500 crore rupee fresh issue and 1,000 crore rupee offer for sale. Priced between 413 to 435 rupees per share, the IPO values Leela attractively compared to peers like Taj and Oberoi, despite its impressive metrics like rupees 22,500 plus average room rates and 50% EBITDA margins. But here's the catch. Leela has been weighed down by a 2,567 crore rupee debt pile, eating away most of its profit. The IPO proceeds are earmarked largely for debt repayment, and post-IPO, the company aims to go nearly zero on net debt. The brand plans to add 678 rooms across 7 new hotels by 2028. Still, rivals like Taj and Oberoi have higher occupancy and stronger brand recall. So, can Leela cash in on the current luxury upcycle, or is it missing the party? Experts say Leela's niche appeal and undervaluation could make it a strong long-term bet if it plays the cards right. India's mangoes, pomegranates and guavas may soon be juicing up shelves across the US if trade talks go India's way. As part of an upcoming bilateral trade agreement (BTA), India is pressing the US to ease strict sanitary and phytosanitary norms that have long kept its fresh produce at bay. The urgency surged after 25 tons of Indian mangoes were destroyed at US ports, wiping out nearly $500,000 in value. Despite strong demand from the Indian diaspora, regulatory hurdles and pest risk fears have blocked consistent access to the US market, reports Mins Dhirendra Kumar and Vijay C. Roy. India is calling for faster approvals, local certification agencies, and a rethink on tariffs, especially when US apples and almonds already enjoy smoother entry here. From FY23 to FY25, India's fruit and vegetable exports to the US rose nearly 28%, but the overall share remains modest. Exporters believe the trade deal could be a turning point. With tariff concessions and aligned standards, our produce will finally be globally competitive, said Akram Hussain of SR Exports. But the clock is ticking. India's cold chain is patchy, fuel costs are high, and even minor documentation lapse could lead to big losses. The message is clear. Open the gates or risk wasting the fruits of India's labor. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.